Hello, welcome to Rachel's classroom. Today we will be discussing final accounts. I would like to start with this problem. Here they have given the trial balance of Thiru Rahman. It is as on 31st March 1995. We are supposed to prepare trading P&L account and balance sheet. Okay, let's go per item. Land and buildings. Land and buildings is an asset, so it will come in the balance sheet. Next is machinery. Machinery is an asset, so it will come in the balance sheet. Patents again should be treated as assets. It comes in the balance sheet. If you see, stock, opening stock is usually given in the trial balance, so this will come in the trading account. Then you have sundry debtors. Sundry debtors again will appear on the asset side because it's a money that people owe you. They have to return it someday to you, so it is treated as an asset. Purchases will again appear on the trading account. Cash in hand and cash in bank will appear on the balance sheet on the asset side. Return inwards. Whatever is gone outside only can come inward. Okay, so what goes out? Sales is going out, right? So when they are returning whatever we have sold, it is called sales return, and the other name is return inwards. Wages, fuel and power will all appear on the trading account. Carriage on sales. Carriage on sales is you are taking away the goods that are being manufactured, finished manufacturing and ready for sales. So this will appear in the profit and loss account. Carriage on purchases. This is usually the raw material that is coming in. That's what you will purchase. So this will appear in the trading account. Salaries again will appear in the profit and loss account. General expenses will appear on the profit and loss account. Insurance, again it's an expense, so it will appear in the profit and loss account. Drawings will be adjusted against capital, which will be posted in the balance sheet on the liability side. The credit balance is capital. Capital is a liability. It will appear on the balance sheet liability side. Sales will appear on the trading account. Return outwards. Whatever has come in, whatever we have brought into the company, we decide to return it. Okay, that's what will go return outwards. So this is purchase returns. Okay, purchase returns, they'll either name it as purchase returns or return outwards. Okay, then sundry creditors. Again, people who we owe money to. Okay, we are supposed to pay them. It is a liability, so it will appear on the balance sheet liability side. Bills payable. Again, the bills that we are liable to pay will appear on the liability side of the balance sheet. We have adjustments here. These adjustments will appear on the balance sheet as well as in the trading or profit and loss account. So the first adjustment here is stock on 31st March 95, 6,800. This is the closing stock. So closing stock will appear both in the trading account as well as the balance sheet. Salary outstanding, that is salary that you have not yet paid, you are liable to pay. So you have to add it to the expenses that are already due to be paid. So it will appear in the profit and loss account. Insurance prepaid. This is expenses that you have paid in advance. Okay, so you can deduct it from the expenses. You have already paid, so you don't have to show it. You have to deduct it from the expenses. Depreciation, again, you will have to adjust it against the assets, as well as you have to show it in the profit and loss account. Provision, there is no other adjustment given here, so you can directly post this provision on debtors to the P&L account, and you can adjust it in the balance sheet. Alright, now let me show you how we work out this sum. So let's start with the trading account. So to opening stock 5,760, to purchases 40,675. You have returns, so you have to deduct it from the value 500. Then wages. There are no outstandings or prepaid, so you can simply post it. No adjustments required. To fuel and power. Then to carriage, they'll either call it carriage inwards or carriage on purchase. So carriage on purchase 2040. You have sales, you have returns also, so you have to deduct it before posting it. Closing stock. So the difference is gross profit. If the debit side is more, then you will have a gross loss. In this case, we have a gross profit. So the gross profit is 43,715. Next is profit and loss account. To carriage on sales. This is either called as carriage on sales or carriage outwards. Both mean the same. Then you have salaries. Salaries, you have an adjustment. There is outstanding salaries. Outstanding expenses you will add. General expenses 3,000. Insurance is an expense. Again it will appear here. But you have prepaid insurance. So prepaid can be deducted. You have depreciation on assets. Machinery 10% on 20,000. 2,000. Patents also has depreciation 20% on 7,500. I'll give you 1,500. So the total value of depreciation is 3,500. Then since you don't have any old provisions of bad debts, you directly post the provision for bad debts. %2 on debtors. You have to bring down the gross profit. Gross profit brought down 43,000. You don't have any income to show, so you can close it. So the difference is net profit. $16,775. Alright. Next we're going to see is balance sheet. So we have capital on liability side 62,000. The net profit needs to be added. Net profit from your profit and loss account. You have to deduct drawings. 5,245. Then you have creditors, sundry creditors. No adjustments, so you can directly post it. Bills payable. Then you have expenses outstanding, which is salary. That is a liability. You have not yet paid it, so it will come on the liability side. Let's move to the asset side. Assets, land and building. No depreciation, nothing. So you can directly post it. Machinery, you have depreciation. So you have to adjust it. Deduct depreciation. Then you have patents. Patents again you have depreciation to adjust. closing stock is an adjustment. You're showing it in two places. First you showed it in trading account, now again in balance sheet. Then you have debtors you have provisions for bad debts, so you have to deduct that from this value. Cash in hand can be written as cash, and cash at bank can be shown as bank. Prepaid expenses you have already paid, so it is an asset to you, so it will appear on the asset side. So you balance your balance sheet. So that's all. We have solved this problem. Thank you. Meet you in another sum.